Welcome back, dear traders. The trading volume on Wall Street was low on Friday because financial markets closed earlier than usual due to the public holiday. Interestingly, despite the Thanksgiving Day, Wall Street managed to finish last trading week with gains for 4 weeks in a row. The Greed and Fear Index tracked by the Chicago Mercantile Exchange dropped to the lowest level since March 2020. It's a common knowledge that the lower the week's index falls and the more predictable market investors foresee for months ahead. The ticker services as a volatility index for the S&P 500 options contract for the next 30 days. Curiously, the week's index has been declining steadily since November 16 and is now estimated at 12.7%. The S&P 500 has been trading higher for 1.5 weeks. Even during the sluggish session on a Friday, the S&P 500 inched up and closed at 4,559 points. The index has looked record growth in the last 4 weeks. It has developed the strongest rally since November last year. As a result, the broad profile index has been able to recoup its losses of the autumn. Futures on the US stock indexes went down in the New York pre-market on a Monday. The S&P 500 consolidated below 4,560 points, and the red-hot economic data is painting a mixed picture. The US economy is surprising investors and disappointing them at the same time. For example, one report registers a decline in the manufacturing sector, while the second one shows expansion in the services sector. This week, the market will get to know a fresh portion of statistics, including GDP for the third quarter and the PCE price index. Such crucial reports will certainly trigger a burst of volatility. The S&P 500 could extend its growth with the help of large US retailers. In the period around Black Friday, retail sales in the US stores surged by more than 1%. Besides, internet platforms recorded an 8.5% increase in shopping. In the period before Christmas, consumers commonly go for a spending spree, so US retailers are ready for a robust shopping activity that, in turn, will bring lofty profits. The fresh macroeconomic data this week will give an insight to whether US stocks will be able to maintain the bullish momentum in December. The highlight of the week will be US gross domestic product and PCE price index. The Federal Reserve pursues the goal of bringing inflation down to the 2% annual target rate. Some downbeat reports released last week showed that perhaps the Fed's hawkish monetary policy exerted pressure on the US economy. Thus, Treasury yields halted their growth. The US dollar extended its weakness for 3 sessions straight. It opened the last week of November at the lowest levels against its 6 rival currencies. The US dollar index opened the New York session on a Monday at 103.20. It's intraday carried around 103.50 and might shift lower tonight after the publication of building permits and the new home sales. In this case, a breakout of the key support at 103.00 will open the door for a deeper fall. Meanwhile, the Canadian dollar is making efforts to maintain the bullish momentum gained last Friday. Canada's retail sales did not only defy expectations but also rebounded by 0.6% from a negative territory. Amid the strong domestic data and the growing risk-on mood, the USD CAD pair even tested the level below 1.36 on a Friday. However, the bullish momentum moderated on a Monday and pushed the loonies intraday Canada up to 1.3620 and 1.3660, the Canadian dollar also took a hit from a fall in oil prices, which sank below $75 a barrel. Bitcoin also retreated from its earlier peaks. The price lost almost $1,000 today. The token is trading lower within the intraday corridor between 36,780 and 37,750. Interestingly, the crypto market gave a muted response to a communique by the US Securities and Exchange Commission. The fact is that the regulator published memorandums officially confirming negotiations on application for Bitcoin ETFs, so it's possible that BlackRock and Grayscale could soon begin listing such spot funds. Judging by the reaction of the crypto market and Bitcoin itself, optimism is postponed for later. The previous jump in the price of the main cryptocurrency to a local peak of 38,400 was caused by an increase in stablecoin reserves on exchanges on November 24. Then, Bitcoin returned to 37,300 on early Monday morning. According to global analytics platform Sentiment, the return of a stablecoin Tether and the USD coin to exchanges will encourage the second stage of a Bitcoin's rally this year. About 6 months are left until the Bitcoin halving. It takes place every 4 years in the spring when coins become more expensive due to reduction in the number. But so far, only one indicator in the Bitcoin blockchain is a steadily growing hash rate. As a result, mining difficulty has already increased by a record 5.07%. In addition, the mining complexity makes the network secure as it becomes more difficult to attack Bitcoin. Feel free to leave your comments and ask any questions. Thank you for watching and good luck in your trading.